Charles, great to have you back on the show, and I do want to get your thoughts on this long-awaited, hotly anticipated report we got earlier this week and what it's going to mean for firms such as yours where there's already regulation afoot. I would imagine it's potentially a very positive development.
It's great to be back on, and I do think this is a good step in the right direction. I think it's just the first step. There's a lot of more dialogue that needs to happen. But having clarity and consistency is ultimately, I think, what makes stablecoin technology and changing how assets move hit an adoption curve where it can affect everybody's life. And so you need regulation, you need clarity in order for everyone to understand how you can operate in the industry. We've always been pushing that from the very beginning. We're the only stablecoin issuer of any real size that has a primary regulator. We operate through a trust company in the state of New York, first one to receive that. And so having that type of regulatory clarity, I think, will do a lot to being able to change what this means to people every single day and how they use this technology.
Yeah, I mean, we talk about Bitcoin and Ether and some of the other cryptocurrencies on a daily basis. And certainly you're seeing Ether, for example, at a record high again today. But stable coins, I mean, I know you have Paxos Standard. You also have Pax Gold, which is backed by physical gold. And you also issue your own or let companies issue their own branded stable coins as well. How big could this business be versus some of those more, I guess, established, if you will, names within the broader cryptocurrency landscape?
Yeah, I mean, there's I think an important way to break it down, which is there are these native blockchain assets like Bitcoin or Ethereum, et cetera, and they're doing different things. Bitcoin's about trying to be gold in some sense, or maybe being a reserve asset. And Ethereum is about being the programming layer that everything sits on top of. And I think they're both starting to do really good jobs at that, but there's a lot more that needs to happen. And then it starts to be about how can you take real assets and traditional assets, so to speak, and put them onto blockchain rails so they can move around like crypto assets, 24/7, instantaneously, low fees, programmatically, open to anybody, create a lot of innovation. And that's what putting dollars on a blockchain is all about. And so we're not exactly sure in the industry how that'll look over time. There's so many different ways you can design dollars on a blockchain. And it won't just be about one person's way of doing it. And so for us, it's about being a platform where we can enable anybody to choose, do you want to use a stablecoin that already exists? We have one of those. It's regulated, called USDP. Or maybe you want to create your own. And we have customers today who are working with us in both ways. And it'll be like that, not just for dollars, but any asset. I think that's what the world will ultimately look like. And that'll be very exciting when you can have any asset moving at the speed of a blockchain, the speed of the internet.
Yeah, I'm curious what this is going to mean in terms of ripple effects to the broader currency market as well, when you're talking about stable coins that are backed by, say, the U.S. dollar, because there needs to be the maintenance of a fiat currency reserve enable for that stable coin to actually exist. So if we continue to see an explosion within this part of the cryptocurrency market, what does that do to the FX market?
Well, I think this is a key item that came out of the report. Actually, is how do you manage your reserves? If you start managing the reserves with all kinds of other securities, you look in some ways like a bank, or maybe look like a ETF or some type of mutual fund. But if you back it, and this is how Paxos does it, with really just cash and equivalents, T-bills and bank deposits, et cetera, you are very, very stable. And so that's just a money market. That's just a government money market. And you're backing it by real dollars. You're not backing it by, say, commercial paper or by corporate debt or something else where you could have interest rate risk or credit risk. And I do think that if you back it just by dollars and say you do that in other currencies, you can transform the FX markets so that they're not moving in 9 to 5 days a week hours. They're moving instantaneously anywhere. You're just kind of seeing that now, but to date, really, the stablecoin market's been about dollars because crypto trades in dollars. And so that's where the need has been. How can you have dollars move at the speed of crypto? But soon it's going to be, how can you have dollars move and the rest of the world's assets move at the speed of the internet?